All right, welcome back into Market Day Report. I am Scott Shelby, otherwise known as the Cow Guy. Thanks for tuning us in if that's what you're doing. But if you've been with us all day, we're going to make sure that that continues to be the case because we got lots to get through here. An exciting week, a lot of numbers coming out, our data entry points. So let's make sure that you've got all those up to date. Let's see how the markets are so far reacting today, and it's a lot different than it was for my radio show. Let's take a look at what we've got going on in that corn market. Corn's up here 4.5 cents in that March contract, 685 is last. May's up 3 3/4 cents to 682 even. So those were all down when I did the show this morning, but now everything's higher. We do see the Dees contract. That's the new crop. That's only up 1/4 cent here. 5.96 1/4 is last there, but still trying to make a move towards $6. Let's see about the soybeans. What's happening over there? They too were a little easier here this morning, or at least around that unchanged level. But we got March up 1 3/4 cents. 15.44 1/4 is last. Now look at this. We were up 11 cents higher than that earlier today. Whoa. May's up 2 3/4 cents to 15.36 1/4. And if we go out the defers that look to be gaining, let's see what we've got going out for Novi 23. This will be the new crop. This is up 4.5 cents. It's giving back a couple pennies. We're at 13.83 1/4, folks. Only about 15 to 17 cents away from that $14 level. Let's see if we can get there. How about wheat in Chicago, the Chicago wheat market? Well, that's up 8 3/4 cents in the March contract up front. 7.94 3/4 is last, while May's up 7 3/4 to 803 1/2. Let's go over to Kansas City and see what the hard red wheat's doing there. The old HRW and KC. We got March up 7 cents to 9.16 even. That's a penny. That's a tick off the highs. May's up 6.5 cents to 903 1/4, and that is on the high. So that one's looking pretty strong as we speak. How about the spring wheat? What's happening in Minneapolis? 2 1/4 cents higher. Has tacked on to that March contract. 932 1/2 is last, and that is a new high. May's up 1.5 cents to 924 1/2, and that too is a new high. There you go. Strong wheat boards as we speak. And finally, let's take a quick visit, check in with the cotton market. It's given back some of its earlier gains, but it's still higher. 76 points higher in the March contract to 86.03. Let's bring in our next guest analyst. That's Todd Horowitz. He's with Bubba Trading, and he's coming to us from Las Vegas. All right, last week we got through some big-time stuff, right? We had the State of the Union, we had a WASDE report, but this week we've got CPI and PPI. We got some things that are coming. This is going to be a big week. How do you think our markets are going to hold up to some of the stuff, the scrutiny that's going to be thrown at them in the next 3 or 4 days?
Well, I think the grain markets are showing us that there's a lot of underlying strength, no matter what we think. Again, there's the math problem, the logic problem tells you that grains have to be higher just because of the input costs that we're going to see planting. I think these numbers will go a long way to determining, that we're going to finally break out into a solid uptrend versus the churn in between some levels. And I think that it will create some pressure in the equity markets, which again would be good news for the grain markets because I think it brings in more new money, as money is always looking for a home. And I think there is no better home right now, in my opinion, than the grain markets. I mean, we talked about wheat last week, and when it was virtually at 720 or whatever. Now it's back to 780. So I think that we're going to break out to the upside when we finally do break out.
And you've been consistently bullish, and that's fine and that's good. But do you have anybody that you're having take a little protection here, or at least buy some puts, or maybe some cash sales, or anything, but to take advantage of it?
I have everybody hedged all the time, Scott. I think that that's just the easier way to do it. You don't have to make the decision. The market makes the decision for you, and when you're going to exit out and finally sell your crop, if it comes that time, then you lift off your hedge and you have nothing left to hedge. But I think if you're just always hedged, but by leaving the upside open, there's different ways to hedge, and by selling futures or by buying a put and selling a call, you're just giving up the upside. You might as well just sell at that point because you're not going to gain any more from that point. If you hedge properly, then you leave the upside wide open and you still have great protection to the downside.
All right, that's great stuff. That's a very good strategy. We're going to go away, think about that for a second, and we're going to come back and talk more with Todd Horowitz from Bubba Trading in Las Vegas about the livestock after this. All right, welcome back. Let's take a look at the other side of things here. That's going to be the livestock market after we just done the grains. See how the grains have affected the livestock maybe. Let's take a look at live cattle in Chicago. That's quietly better. That's what I'm going to call that. April's up 87 cents to 164.82. June live cattle are up 37 cents to 160.12. If we move over to see what's happening in the feeder cattle, well, what's happening in feeder cattle? That's a little bit, much the same. March is slightly better, 35 cents higher. 186.75 is last there. April's up 57 cents to 191.25. And then finally, if we take a look at what's going on in the lean hogs, they were in the headlines last week trying to tack on some gains here. $1.15 higher in April. 84.47 is last there in May. That's up $1.10 to 94.30. Let's bring back in our guest analyst, Todd Horowitz from Bubba Trading in Las Vegas. Todd, thanks for sticking around. Anything jump out at you there? I mean, this is kind of an interesting one. We've got some stories on our network here about the consumer still paying up for some expensive beef.
Well, listen, as long as crude oil stays down, stays at these lower levels than where it was, you're going to continue to see beef. I mean, I think beef looks great. As I've said many times, I don't think there's a dramatic amount of room to the upside. I don't think they're going lower, though. I just think they're going to continue to drift and probably drift a little bit higher from here. And hogs, you can see, although they were much higher earlier, they're still higher, but they've come off quite a bit from their earlier highs. And again, that's the ease of the mind of the consumer who's, paying less at the pump so they can afford to buy steak instead of pork. And look, I think that this is all going to come out in the wash, as they say, through this week. I think that, everybody knows that the 6.2 tomorrow expected CPI number is ridiculous. I mean, nobody's paying less than probably 20% year over year from last year from what they were paying for goods and services.
Wait till it comes in even lower because they're starting to rejigger that. They've got a new way that they're looking at the CPI, and this is the first read we're going to have with a new way that they're calculating CPI. And I don't know about you, Todd. I've been around a lot, a long time. Then if they're going to change a number or redo a number or recalculate a number, they're not going to recalculate it so it makes them look worse, right? So I would expect that there's a chance that you could see that CPI have a little bit of a shocker to the downside. We'll have to wait and see, but that's my expectation, and I know that was unsolicited, but there you go. All right. Appreciate you coming on the show. Always good stuff.
Guys.
Yeah, thanks for being on. Todd Horowitz, Bubba Trading in Las Vegas.